Hi there, everyone, and welcome into this week's market update. Don't forget that any advice contained within this presentation is general only, so it isn't tailored to your particular circumstances. You need to decide for yourself whether it's appropriate to you. Okay, so it was another bullish day on the XJO, pushing us ever so closer to 75 and ever so closer to the all-time high just above 76 there. What a move, guys. Okay, we've come into this year smashing higher, really. Looking at close to what we're 480 odd, 470 odd points higher. Pretty big move. Now looking very overbought, going by pretty much any indicator you're looking at. I'm going to ignore that indicator until this actually tops out. What this reminds me of is actually the move back here, where it just kept grinding higher and higher. And I'll just zoom into that for a second. Okay, and that started, March last year. We grinded up into sort of April and then pulled back through May, April and May. Okay, similar sort of move here. I think we're coming into sort of that sideways grind into the all-time high, and then we have to see where we're going from there. But I think between now, sort of middle of Feb with the reporting season, that sort of thing, I think we'll come up and challenge that 76. That's for sure. I think we'll have a couple of good goes at it, and then we'll just have to see whether it can get through or whether we're going to see another sort of pullback. And I think that's really going to come into whether in March they continue to lift interest rates or not. I think that's really going to be probably the catalyst or a CPI reading or something like that. At this stage, the reporting seems to be coming through okay out of the US, and I think our reporting season is actually going to be fairly good. And that's going to get us either into an all-time high or it's going to get us up to that 76, that's for sure. But technically, look, it's way overdone. Without a negative catalyst, though, I can't see us pulling back. All I can really see at this point of time is a grind higher, okay? Unless something negative comes out and, you know, um, there's a few things coming up, and I'll talk to that in a moment. S&P 500, okay. Last night, you can argue that it may have broken higher. Okay, it's really depending on how you draw your line. Some people would be drawing it as broken, some people not. If you draw it something like this, which is valid, okay, you're calling that as a bit of a break. Can also bring it up to grab the tips of the candles. I typically come down to try and grab the bodies of the candles, okay, which means I'm grabbing the bodies there. That's how I like to draw my trend lines, and I'm drawing it as broken. But I know some people in the office today are drawing it as not broken, okay. For me, there's higher peaks and higher troughs in this time frame. What I'm really looking for to get that clarification of a break higher is a breakthrough 41. If we get through 41, that gives me my peaks and troughs, high peaks and troughs that I'm after, and I'll be a little bit more happier from a technical standpoint. It does feel that we're likely bottoming here, and I think that's probably clearer on other charts, the NASDAQ and things. Still too early to 100% call it, but, I do feel, especially if it goes through 41, there's a high chance we're heading at least up to around 43 or so in the coming months, okay? And then it's all important to be looking at the NASDAQ chart right now also, because there's a lot of activity coming in there. Last night, without a doubt, okay, if you draw the downtrend line in, okay, that downtrend line, doesn't matter how you draw it on the NASDAQ chart, to me has broken, all right? Get through all those peaks here. I can bring it up through there, I can bring it down. It doesn't matter where I move it, it's clearly broken. But it hasn't fulfilled the reversal pattern for me yet. What I do like is that we've got a higher trough and a higher peak scenario here. But I want to see it through the 200-day average, and I want to see it through this resistance here. Okay, if we can get through those two levels with this higher peak and higher trough, then we've got a nice little uptrend starting down here. If it also gets through that resistance, we confirm the triple bottom, and that suggests to me a move back up maybe to this higher resistance level eventually. So look, there's some signs of a bottom here. Hasn't 100% confirmed for me yet, but there's definitely some very, very strong signs here that you cannot ignore. Okay. Now, we do have a fair bit of earnings coming up this week out of the US. In fact, this is probably one of the busier weeks for the earnings season this week. And we'll have a few, big names as well. reporting. A lot of the big tech, though, really we're waiting out to next week. But the biggest one I'm looking forward to, which is after market tonight, is Microsoft. Okay, and I think that's going to be a positive report, and I do think it's going to help push this space up a bit further. So, what really ignited the buying in the growth space was Netflix. Okay, like late last week, they missed on earnings, but they beat on subscriber volumes. Okay, and they were looking pretty good on the revenue side as well. So the market reacted very positively to perhaps what looked like a negative earnings result. But anything that's a little bit positive here, because these stocks have been beaten down so much, you saw strong buying on the back of the pickup in subscriber levels. And you remember Netflix is changing their model and then they're going into a free subscription model and things like that. But so you should see some more advertising revenue come in over the next 12 months or so as they're building all that up. So look, Microsoft to me is big, right? I want to see how that reports through tonight. You've got J&J tonight as well. So a couple of big names there. And then, look, for me, the market's going to whack around depending on reporting. If we continue to see reasonable reporting, which I think it will, right? I think we will. The banks reported extremely well and pushed up and then pulled back a touch because they're already a bit overdone. With the growth space, it's the other way around, right? The growth space oversold. All it takes is a reasonable report, and I think we'll start to see some reasonable movement up. Whereas the banks moved up into their reporting, this growth space hasn't really moved up all that much into the reporting season, maybe a little bit, but nowhere near as strong as what those banks were. All right, so the next big thing outside of earnings in the US is obviously interest rates. Okay, it's always looming in the background. The Fed meets next week. We'll hear an announcement early Thursday morning. At this stage, the expectations is a 25-point rise, which is pretty tame compared to what we saw last year. Now, the consensus out there at the moment is that the Fed will lift rates in Feb by a quarter, in March by a quarter, and then hold rates throughout to September, where after September they'll look to maybe there's a 50-50 chance of a drop in rates come September. So what's the consensus, guys? The consensus is we're near the top. Okay, the Fed did indicate they're going to move to about 5%. They're going to get there by March if they keep lifting by 0.25%. And that's the consensus at the moment. The Fed is going to continue to talk a little bit on the hawkish side. Okay, they have to because inflation hasn't come back down to where we need it to be yet. So they'll stay on the hawkish side of things. When I say hawkish, it might mean that they're going to say they're going to leave rates at 5% for longer. It doesn't necessarily mean that they're going to say that they're going to keep lifting rates. What they have to do is sort of keep people sidelined until CPI comes down. And to keep people sidelined is, hey, we're going to hold rates up. And, if you guys get too dovish yourselves, we're just going to lift rates again. We're going to have to because we need CPI back down to 2 to 3%. So that's the messaging, right? You're going to get that type of neutral to hawkish messaging from the Fed whilst they sit on their hands and do nothing for a while. Okay, I think that's kind of the picture of what we're going to see in the next 6 months until CPI comes down. And when CPI comes down or we get some really weak economic activity happening, that's where you might get a bit more of a dovish Fed. Job numbers are too strong, guys. You're not going to get a dovish Fed yet. Okay, I've had a lot of people come to me and ask me about when the Fed's going to turn dovish. I don't think you actually need the Fed to turn dovish to get a rally in this market, guys. All right, you don't. I think people are reading between the lines. All they need is a sense that rates are topping, and we're getting that out there at the moment. There's a clear message out there in the Fed watch tools and in the bond markets and things that rates are likely to be topping out this quarter. Okay. So look, the Fed announcement next week, yes, it's going to be important. People are going to be listening to language and you might get some short-term knee-jerky reactions to it. But at the end of the day, the expectation is 25 points. If they do the 25 points and stay on message, I think everything will be fine. Okay. RBA will be the week after. Okay. So yeah, the RBA won't be until the first Tuesday in Feb. So we'll have Fed next week and the RBA the week after that. Australian CPI is coming in tomorrow, okay? Important number that will help us sort of try and predict what the Fed will do next. What the RBA will do next. If the CPI comes in lower than expected, then we expect the RBA to even maybe sit on their hands, okay? If it comes in a bit higher, well, the banks might come off a little bit, guys. Okay, with rates going up potentially. So, just that could be something tomorrow to watch out for. It's really important. Then Thursday for the Australian market, we go into a public holiday for Australia Day celebrations. Okay. All right, last but not least, guys, is this time to be moving towards growth stocks? There's definitely early signs of it, I can tell you, right? So, definitely starting to go through and getting my watch list happening of what stocks are in this space are starting to show reversal patterns or starting to show uptrends again. Okay, that's what I'm looking for, reversal patterns. So double bottom, inverse head and shoulders, those types of patterns, or a break of the downtrend with a higher peak and a higher trough. They're the technical things I'm looking for to try and find a good bargain in this market. The risks are still there, okay? There's still a war going on between Russia and Ukraine that hasn't gone away. Inflation's still up there, way above the central bank's targets. So risks are still there. So I'm not saying that you're not buying into a risky market. So be careful and look at your money management and look at how you're managing your purchases down here. What I am saying though is in the short term to medium term here for the first quarter of this year, the sentiment is positive towards this space because people believe that interest rates are topping. Okay. That could all change in a couple of months' time. So we have to have our finger ready on that sell trigger, right? But for now, I feel this is a good time to start considering buying in this space. So you've got to be looking at things like ALL on our market, Blue Scope on our market that are starting uptrends. Get in on the trend as it bounces off. Set yourself up in a way where you can exit if the trend breaks. Okay, it's a simple trade. It's a theme that's playing out at the moment. And you might want to perhaps wait for Microsoft to report or wait for a few more growth sort of techie discretionary stocks in the US to report. If you're a little bit more on the conservative side, wait for another week perhaps, okay, a week or two. Depending on your strategy. Remember, guys, it's all general advice. You need to apply it back to your own strategy, right? All I'm saying is pay some attention to this space because it is oversold. Okay. And if this is the top of interest rates, then you might have just found the bottom of the market. Okay. So I don't think it's going to be as clean cut as what we saw out of COVID. All right. Because obviously that was a lot of stimulus involved in that move. And for us to see that type of massive recovery where we saw the US, double in price and that sort of thing. If we're going to see, the US markets double in price, stimulus has to be involved. But there's nothing to say that the Nasdaq won't go back to last year's highs. Okay, in the next 6 to 12 months, it could definitely do that. So I'd be watching that space very closely as the reporting comes through, as those technicals play out. So look, they're sort of the major themes at the moment. It's obviously still interest rates. Interest rates are going to be important. Inflation is going to be important for the rest of this year. Earnings is very important for the next few weeks. And then, where's the money flowing? Okay, the money's already flowed into mining. It's already flowed into the banks. They're all looking a little bit on the overbought area. And now where's it going to go next? It's probably going to go towards this growth space as long as this earnings season remains good and as long as the Fed behaves themselves, right? There's a few caveats there that you got to think about. The other thing to mention, obviously, is Chinese New Year this week. So they're closed for the majority of the week. Hang Seng reopens, I believe, on Thursday. Iron ore futures are closed all week. So you're not going to get your next big lead for your big three miners or any of your iron ore miners until Monday. Okay, so just watch out for that space as well coming into next week because that could reopen up higher, lower. We'll have to wait and see. All right, that's probably about it for this week. So thanks for listening in. Take care and bye for now.